Problem 18-35B, classifying costs. Langley Incorporated is the manufacturer of lawn care equipment. The company incurs the following costs while manufacturing edgers. Okay, we're going to describe the difference between period costs and product costs. So we don't need this yet. So remember from the video of the PowerPoint, costs are broken down into period costs versus product costs. Product costs are just that, costs associated with building or obtaining a product, which you later plan to sell. Period costs are all other costs, and they are expensed in the period in which they are incurred. So which of those costs are operating costs that are expensed in the accounting period in which they incurred? Well, I just said that those are period costs. Basically, they're all costs that are not product costs. And then product costs are all costs that are of a product that requires companies to treat as an asset. So remember, these product costs are going to be on until the product is sold. These product costs are going to be in an inventory account, either raw materials inventory, work in process inventory, meaning the product has not been finished yet but has been started, or finished goods inventory, which means the product has been finished. So it's a GAAP, generally accepted accounting principles, that requires companies to treat these product costs as an asset for external financing reporting. These costs are recorded as an asset, inventory, on the balance sheet until the asset is sold. So once it's sold, the cost is then transferred to an expense account. What's that expense account called on the income statement? You should know this by heart by now. Cost of goods sold. Can't be cost of goods manufactured, because once it's sold, it's the cost of the goods sold. And to show you what I was talking about, we've got a manufacturing company's income statement and balance sheet. So down here in the asset section, we've got raw materials inventory, work in process inventory, finished goods inventory. Then once a product is sold, this finished goods inventory is decreased, and then cost of goods sold is increased. And then notice, how do we calculate gross profit? We take sales revenue, we subtract cost of goods sold, and we get gross profit. And of course, this is the calculation for cost of goods sold. So that's what they're asking next. On the income statement, cost of goods sold is subtracted from sales revenue to determine gross profit. And then what's subtracted then to calculate operating income? It's the selling and admin expenses, which are also known as period costs. Now, we get to go through these one by one and classify these costs as either direct labor, direct materials, manufacturing overhead, or period cost. We really don't need this list because it shows you them one at a time. So the handle and the shaft of the edger. So the edger is a piece of equipment that helps edge your lawnmower. So that is obviously direct materials. The motor of the edger is also direct materials. It's part of the product and can be traced directly to each edger. Factory labor for workers assembling the edgers. These are the people who work directly on the edgers. So that is a direct labor cost. Lubricant used on bearings in the edger, not traced to the product. So what they're telling you is that we've got lubricant that's being used in the edger, and they're telling you that they're not specifically measuring how much lubricant is used on each one, because it's not, they could, but it's not economically feasible. It's too expensive, and you get such little information out of it. So this would be an indirect material. Now, indirect material is not on this list, so remember, indirect materials fall right here under manufacturing overhead. Next, we got glue to hold the housing together. Now, are they going to sit there and measure how many drops of glue that they use? No, this is going to be another indirect material, which again is manufacturing overhead. Plant janitorial wages. Now, so this janitor is in the plant, and the plant is where they make the edgers. So that is an indirect cost, and specifically it's indirect labor. Because the reason it's an indirect cost is we cannot trace the janitor's wages to a specific edger. We don't measure how much goes to each edger. So that is a manufacturing overhead. Next, we've got depreciation on factory equipment. So the key is this is the factory equipment. So again, this is a product cost, but it's not a direct cost. It's not direct materials or direct labor, so it has to be manufacturing overhead. Because we do not trace this depreciation specifically to one edger or the other. And rent on the plant. So since this is rent on the plant and not rent on the office, the plant is where the product is made. This is a product cost, and it is a manufacturing overhead because it's not specifically traced to one edger or the other. And then we got sales commissions. So sales commissions, do salesmen produce a product? No, so it is a period cost. And then administrative salaries. Do they work on building products? Nope. So this is a period cost. Plant utilities. Since these are utilities for the plant and not the office, this is a product cost. But the utilities, like the electricity, they are not traced to one edger or the other. That would be too difficult to do. So that is manufacturing overhead and indirect cost. Shipping costs to deliver finished edgers to the customers. This has nothing to do with building the product. This has to do with selling the product. So this is a period cost. And that's it. So as you can tell from this homework, it's really important to understand how costs are classified.